Hey everyone, good morning. It's JJ here at microwavefutures.com. Wanted to do a quick little video here just to talk about something called cost basis, which is not a very popular subject. It's not really talked about a lot, but if you understand the wholesale interaction of markets, you'll understand something called cost basis. And cost basis is basically where traders of size who act as wholesalers, and also the wholesalers who buy and sell from us, this is where they have sort of inventories of product. So yesterday we had a nice, beautiful sell-off. The market came down, looked underneath our 39.27 wax level, and our 39.32 came back up. And you can see there's a concentration of volume here. And you can see it here on the TPO chart between, I'd say, maybe 28, 27, and 32. And you can see that here. You can see this concentration of volume. Well, that is the lower cost basis of yesterday. And then the market, you can see, closed higher than the M low. So there's another cost basis up here, which is here. So if you're trading at night, generally what happens is if there's no selling in the opening auction in the Globex or night session, the market will come into the cost basis, the first one here, and then the large traders who are long in these areas just stop selling. And guess what? When you cut supply, you create demand, something very few people actually talk about. Having controlled supply in multiple stocks, this is something I'm very intimately familiar with. So when you cut the supply here and you didn't take out the O and N lows, right, you basically create demand because people start to buy and there's no supply, so the market starts to go up looking for supply. 39.55 is our big level, and we put a poor high in here. We traded sideways for about 7 hours and sold what we took in here above the close. So overnight inventory was long above the close. Then once the buying subsides, people don't want to buy anymore, the large size traders who are positioned here and here simply sell the market down to their lowest cost basis. As you'll notice, the overnight low comes right to that original cost basis, and in fact nowhere near 39.27 value area low or the previous day's low. So this is responsive trading. Now what we're going to be looking for is consolidation in this area and then a move back up, because what will happen is the large traders sell the market down, the people who are trapped long above the close sell out, right? The large traders who have sold the market down use the money they make from selling the market down and out competing those long trapped traders. They can undercut price, right, to get rid of competition, just like Walmart does, right? So they sell the market down because they can afford to. They own it down here. Then what they do is they stop selling and just sit there and let the shorts come in and cover. Shorts always buy back first at the lows. Then what happens is once long traders see what we call price stability, they will start positioning themselves. You'll already see a little stop run here in this R period. So what we're going to watch now is see if this volume can be taken up and sold back up here, right, in this area here, right? And you can look at that on a 5-minute candle wax chart. You can see that we are in the lower cost basis. So, there's a seller at 39.40. And once this has been cleaned up down here, right, all of those trapped longs, once we've, you wring out markets like you wring out a towel with water, right? You squeeze all the people out of it who are short-term traders, buy their product, take it back up and resell it for profit. We'll be looking at acceptance over the first standard deviation and then VWAP if the order flow supports it. Now, what happens if a big seller comes in or a series of large sell orders? We will get down, break this cost basis, break 39.27 value area low. And remember, today in our regular trading session at 9:30, this 39.21.5, that is a huge level that we'll be looking for on a longer term scale. If the market breaks that, my target is 38.95, is the lower target, which is the bottom of the zone that we're in. 39.55 to to $38.95. But so far, it's just acquisition of inventory, disposal of inventory for a profit, acquire the inventory again. It's just like the world's largest car lot. Anyway, I'm JJ at Micro E Futures. If you want to figure out how inventory moves price so you can actually trade without a blindfold, you'll actually have a decent idea of what's going on and learn how to execute around these principles, come see us at microefutures.com and Equities ETC. We'd love to show you how to trade with the business transactions that actually create the chart, folks, because all this is doing is any chart, whether it's a candle wax or a TPO chart, all it's doing is it's a representation of the business transactions that are happening in this market. None of this stuff is random. If anybody tells you markets are random and you believe them, I've got some oceanfront property in Saskatchewan to sell you. Just kidding. Come see us. We'll teach you how to make a living in this crazy business. Hope you have a wonderful day. I'm JJ. Bye for now.